You watch the market open. Candles flicker. The screen lights up with numbers that feel like tiny bombs. Your heartbeat matches the ticker. Every blink could cost you. Every hesitation could be the difference between profit and regret. You feel that itch in your chest, the one that tells you something is about to break. The kind of fear that's quiet, but real. It's the moment most traders never admit to anyone. The moment where decisions feel small, but consequences are massive. And yet, you trade anyway. You always trade anyway. Two traders look at the same chart, same setup, same volatility. One is the logical trader, the other, the revenge trader. Their eyes are on the screen. Their hands twitch, but their minds, worlds apart. The logical trader takes a deep breath, waits for alignment, checks risk, internalizes the market's rhythm. The revenge trader reacts to a spike, reacts to the news, reacts to the fear that tightens his chest. It's almost instinctive, almost invisible. But AI sees it all. Every micro-movement, hesitation, speed of reaction, and inconsistency. Your behavior is data, and the data never lies. You might think you're reacting to the market, but the truth is, the market reacts to you too, to your patterns, your impulses, your greed, your fear. And now, AI sits in the background, silently observing, quietly classifying. Statistical models can predict over 70% of impulsive losses in retail traders before they even click the button. It's not magic. It's pattern recognition. It's your brain, measured, quantified, turned into predictive intelligence. The logical trader notices it. The AI flagging micro-losses, position sizing inconsistencies, hesitation before entry. He doesn't need to see the probability. He feels it. His internal monologue keeps him grounded. I'm not here to chase the candle. I'm here to execute what I've already confirmed. If the setup isn't perfect, I don't trade. His fingers hover, then click. Calm, measured, calculated. Every move reinforces the structure he's built. Discipline isn't just a word, it's survival. The revenge trader thinks he's fast, that intuition will save him. He enters, exits, doubles down, swears at the screen. I can't lose this. I need it back. And just like that, emotion clouds logic. His sizing grows erratic, exits delayed, entries rushed, pattern after pattern ignored. AI notes it, logs it, predicts it. His next move is already anticipated, and he doesn't even realize it. A recent study revealed that traders who act purely on emotion are 60% more likely to experience consecutive losses, even if their initial setups were profitable. The system sees it. You can see it too if you're honest with yourself. Back to the logical trader. He sees the same move. He waits, evaluates the macro and micro context, checks correlations, confirms the edge. He enters. He sets stop loss. He aligns trade size with risk, not ego. His mind is calm. Even when the candle spikes against him briefly, he doesn't flinch. His internal monologue whispers, "Market isn't personal. My edge is personal. Stick to it." The difference is subtle, almost invisible, but profound. The AI flags him as low risk, consistent, predictable, in the way a champion behaves. Predictable doesn't mean boring. Predictable means stable. It means surviving. Meanwhile, the revenge trader spirals. One position closes in loss, another in minimal gain. He chases, he reacts, he doubles, he panics. He tries to recover. And each time he does, AI's models register the pattern. The algorithm doesn't judge, it calculates. Reaction speed, sizing changes, exit delays. These signals combined indicate high probability of repeated errors. Traders like him, they're visible before they even know they exist. And yet, he keeps trading, thinking, I'm adapting, I'm learning. But adaptation without structure is just reaction masquerading as strategy. The logical trader now looks at the bigger picture. He knows volatility is temporary. He knows patterns repeat. He checks correlations, reviews past entries in the same market environment. He's building a data set of his own, not just relying on charts, but on internalized proven edges. His monologue reminds him, my edge isn't yesterday's trade. It's today's setup with discipline applied. AI can predict his behavior, but only because it recognizes the patterns he intentionally enforces. Intentional behavior is far harder to exploit. Discipline becomes armor. The revenge trader, by contrast, reads news, jumps to conclusions, reacts to social sentiment, trades off hope, trades off fear, trades off the echo of a past loss. AI notes every hesitation, every impulsive movement, every overreaction. In one study of retail traders, over 55% of losses occurred not due to bad setups, but due to inconsistent risk management triggered by emotional reactions. You feel the truth here. You've lived it. And if you're honest, you recognize it. The market punishes predictably. Logical trader profits slowly, steadily. Revenge trader loses. Small at first, then larger, then spiraling. His monologue grows desperate. I can't let this loss stand. I need to fix it now. But the AI already anticipated his next 3 reactions. Predictable patterns compound. Each reaction reinforces the probability of the next mistake. His brain isn't adapting. It's following a loop, a dopamine-fueled, fear-driven spiral. Logical trader now observes the AI prediction layer quietly integrated into his strategy. He doesn't need it to tell him what to do. He uses it to confirm. He sees the micro-fluctuations flagged as high-risk moments. He stays patient. He doesn't chase the candle. His entries are clean, his exits precise, his sizing disciplined. Even in moments when most traders panic, he behaves like a professional machine. Statistically, disciplined, data-driven traders outperform impulsive peers by over 45% over a quarter. Not rumor, proven. This is the modern edge. The AI doesn't replace skill. It amplifies clarity. Meanwhile, the revenge trader can't see the rhythm. Every candle spike is a signal to move. Every red candle is a threat. Every green candle a temptation. His internal monologue becomes louder. If I don't act now, I'm missing the move. I can't wait. I have to enter. And with that, he enters at suboptimal levels, adds size, doubles down, moves, stops. Everything the logical trader avoided. Predictable to AI, catastrophic to him. The algorithm doesn't need emotion. It just reads the signals and confirms probabilities. This is the uncomfortable truth. The majority of retail traders behave this way without ever admitting it. Back to the logical trader. He reviews his trade log mid-session, every prior move classified, patterns understood, errors minimal, psychology intact. He realizes the AI flags low-risk moments. He continues executing his plan. His monologue. I control risk, not the market, not the fear, not the headlines. My data is my edge. He's building compound discipline. He's building immunity to emotional manipulation. This is modern trading psychology in action. The revenge trader notices it all. Envy, fear, and desperation blend. Why can't I see what's obvious to him? Why am I losing? He doesn't understand that his own patterns are betraying him. AI sees it, and the data is clear. Impulsive actions, emotional sizing, inconsistent timing. Combined, they make an almost inevitable blow-up. One internal study found that traders who deviated from planned risk parameters more than twice in a session lost 70% of their total weekly profits. Invisible to him, visible to AI, devastating to his account. Logical trader closes the first intraday trade. Small win. Patient. Structured. Emotional calm maintained. He doesn't celebrate. He evaluates. He plans. Micro-adjustments logged. Edge confirmed. Stability reinforced. Reinforcement learning. His pattern is now positive. AI confirms stability. Profit isn't just numbers. It's confidence, clarity, and repeatable execution. The revenge trader, in contrast, overreacts to the small loss he experienced earlier. He doubles down. He tries to catch up. Ignores setup validation. Ignores correlation. Ignores proven edge. Panic drives behavior. Every click of the mouse, every sizing change, every impulse feeds a model that could have predicted it minutes before. His monologue screams, I need this back. Now. I can't lose again. I can't. But the algorithm already anticipates his likely next errors. and his account suffers. Logical trader now executes a second trade. Calm, data-driven, pattern confirmed, risk respected, no emotion attached. AI confirms alignment, historical probability of success aligned with discipline. He moves with precision. He doesn't fight the market. He orchestrates his behavior around his edge. The difference is subtle, yet profound. Stability becomes power. The revenge trader enters a third trade without proper confirmation, reacts to volatility spike, adds size impulsively, exits too late. Emotional cost mounts. AI notes the sequence. Probability of further error climbs. Statistically, impulsive traders performing more than 3 consecutive trades without adherence to risk rules lose 65% more than disciplined peers. Patterns repeat. History repeats. And the revenge trader is caught inside it. Logical trader now pauses mid-session, evaluates previous trades, confirms alignment, adjusts sizing minutely, prepares for the next movement. Pattern integrity maintained. His monologue: discipline compounds, patience compounds, edge compounds. I don't fight the market, I respect it. Every small victory reinforces identity. Identity becomes practice, practice becomes automatic. Revenge trader, meanwhile, spirals further. He sees profit elsewhere, acts without plan, loses more. Internal dialogue worsens, anxiety spikes, dopamine and fear hijack logic. AI reads everything, flags the sequence, probabilities update. Loss becomes near inevitable if behavior continues. And yet, the session isn't over. The logical trader observes, waits, acts, adapts slightly, remains consistent. Every move backed by analysis, pattern recognition, and risk awareness. Even when unexpected volatility hits, he's unaffected. He understands a deep truth. Market chaos isn't personal. Reaction chaos is. Stability becomes the true edge. The revenge trader, frustrated and reactive, can't break the loop. Every micro-mistake compounds. Overconfidence, panic, impulsiveness, a self-perpetuating cycle. AI sees it, predicts it, records it, and he's powerless to stop it without deliberate intervention. Logical trader closes mid-session, wins consolidated, emotional equilibrium intact, data reinforced, AI confirms low risk, high stability behavior, reinforcement of identity complete. He's the trader AI classifies as a winner because he behaves consistently, logically, and intentionally. Control, clarity, and calm. These are the tools of modern trading psychology. Revenge trader logs out, account depleted. Lessons unlearned. Patterns repeated. AI logs predictability of impulsive failure. And while he might try again tomorrow, the lesson remains. Structure, patience, and alignment are not optional. They are survival. Emotional trading is a liability. AI can detect it, and disciplined traders can use it to dominate it. Logical trader now reviews session. Micro-adjustments, edge intact. Psychological clarity intact. Identity confirmed. He realizes one fundamental truth. Modern trading psychology isn't about speed. It's about predictability. It's about consistency. It's about data-driven decision-making, reinforced by AI insights. The market continues its rhythm. Candles flicker, liquidity ebbs and flows. Volatility pulses. The logical trader watches calmly. He knows this dance. He's not reacting. He's observing. Every micro-fluctuation, every spike, every subtle movement is a note in the symphony of data he's already internalized. His fingers hover over the mouse, but he doesn't act impulsively. He waits for pattern alignment. Patience becomes his weapon. Discipline becomes his armor. A shield no market swing can pierce. The revenge trader, on the other hand, feels cornered. One loss sits heavily. One missed opportunity haunts him. Every market movement triggers anxiety. He enters, exits, adds size, overcorrects, and repeats. AI watches silently, recording the minute changes in his behavior. Position sizing inconsistencies, hesitation, late exits, early entries all feed the model. Probabilities spike. Statistically, A reactive trader entering more than 4 trades within 30 minutes without adherence to risk strategy loses 68% more than a disciplined trader. And yet, he doesn't see it. He feels like the market is against him, instead of recognizing that his own mind is the variable being exploited. The logical trader now executes a second wave of trades. His entries are precise, stops calculated, exposure aligned to risk tolerance, and emotional detachment complete. He doesn't celebrate small wins. He doesn't panic at small losses. He moves as if the market is merely information, not judgment, not threat, not promise. AI monitors, notes stability, confirms low-risk behavior. The probability of long-term success increases with each logical move. Every repeated, disciplined action compounds into consistent profitability. Meanwhile, the revenge trader acts on instinct. He sees a spike and jumps. He sees a dip and doubles down. He hears social chatter and reacts immediately. Dopamine and fear distort decision-making. The brain rewards short-term relief while punishing long-term strategy. Studies have shown that impulsive trading behavior is associated with 62% higher exposure to consecutive losses, even when setups initially appeared profitable. Each reaction feeds the loop, a loop that AI predicts before he even clicks. He's trapped in his own mind, blind to pattern, blind to probability. Logical trader reviews a trade mid-session. He notices a tiny deviation from expected behavior. He adjusts micro-position sizing, recalibrates stop-loss, aligns with historical edge. His internal monologue reminds him, I am executing the edge, not reacting to noise, not reacting to fear, not reacting to greed. The market will do what it does. I will do what is consistent. AI confirms the probability. Disciplined traders who align actions with historical edge achieve 50% higher consistency over the month compared to reactive peers. The algorithm doesn't care about emotion. It cares about measurable stability. Revenge trader, on the other hand, faces the same deviation. Panic sets in, hesitation, overreaction. He alters stop losses, miscalculates sizing, repeats the impulsive pattern. Each movement reinforces predictability. AI flags the sequence. Probabilities of loss increase. Yet he continues. He believes he's adapting. But adaptation without data is just chaos. Reaction without structure is self-destruction disguised as action. The logical trader now steps back for a moment. He observes the macro context, checks correlations, evaluates volatility clusters, confirms setups. Even when the market pulses unpredictably, he doesn't flinch. Calmness is not an absence of action. It's the presence of intention. The AI sees the alignment, sees the edge applied consistently, notes the psychological stability, confirms low-risk, high-stability behavior. This is not luck. It's engineered resilience. Pattern integrity becomes identity. Meanwhile, the revenge trader spirals further. Impulse after impulse, reaction after reaction. Overconfidence masked as strategy. Panic disguised as action. He jumps from chart to chart, trades every apparent opportunity, and fails to recognize the risk stacking invisibly. Each trade is a data point for AI, a pattern of error. And yet, he doesn't see it. Emotion blinds him. He believes the market is to blame, that luck, timing, or chaos is unfair. The uncomfortable truth remains. Emotional trading without structure is inherently exploitable, and AI can predict it with high accuracy. Logical trader now executes a high probability setup. Alignment perfect, timing exact, position sizing disciplined. He moves decisively, calmly, without hesitation. Every candle is information, every spike is noted, every outcome accepted. His internal monologue is silent but strong. I am a pattern. I am consistent. I am not manipulated by fear or greed. He's not just surviving the session. He's controlling it within the limits of risk. The AI recognizes consistency, notes stability, logs the positive reinforcement. This is modern trading psychology in action. The revenge trader watches envy, anxiety, panic. He enters impulsively, doubles down after a minor loss, exits prematurely after a small gain, repeats the same micro-errors that AI has flagged. Each error compounds. Behavioral reinforcement is now negative. Emotion dictates action. He doesn't realize that his reactionary trading is 4 times more likely to lead to consecutive losses in a high volatility environment than disciplined pattern-based trading. The data is clear. The pattern is inevitable. And yet, denial persists. Logical trader, mid-session, takes a micro break, observes charts, reviews data, confirms edge, reads subtle cues in price movement, confirms setup integrity. He doesn't fear volatility. He doesn't chase profit. He doesn't panic. He aligns behavior with validated strategy. And every movement reinforces identity. Calmness becomes habitual. Consistency becomes compounding advantage. AI predicts his actions with accuracy, but cannot exploit him. Stability is the true edge. Revenge trader reacts to volatility spike. Positions misaligned, sizing emotional. Exits delayed, enters prematurely, frustration mounting, dopamine spikes, fear spikes. He believes he's adapting, but he's reinforcing predictable failure. The algorithm logs every micro-behavior, every hesitation, every emotional spike. Probability of next error increases. This is the uncomfortable reality. Emotional instability is visible before self-awareness. Logical trader closes a profitable trade. Minimal emotion, maximum clarity. Pattern integrity maintained. AI confirms probability of continued low-risk performance. His monologue reminds him, discipline compounds. Risk respects clarity. My mind is the edge. Stability over time creates identity. Identity over time creates mastery. This is how modern traders survive. How modern traders thrive in a world where AI observes every reaction. The revenge trader closes a loss, panics, adds another position, repeats impulsive cycle. He believes in intuition, believes in adaptation, believes in luck. The algorithm predicts next probable error, flags emotional overreaction, notes sizing inconsistencies. Probabilities climb. Over 4 micro-trading windows, reactive traders lose cumulatively 57% more than structured, logical peers. AI doesn't judge. It calculates. It sees the future before the trader does. And that's the uncomfortable truth. Patterns matter more than passion. Structure matters more than intuition. Logical trader closes the day. Reflection complete. Trades evaluated. Risk respected. Emotional equilibrium intact. Identity solidified. AI can predict his behavior, but cannot exploit him. He has mastered the balance between awareness and action. He moves forward, calm, prepared, disciplined. He is the logical trader, aligned with modern trading psychology, using AI not as a competitor, but as a reinforcement of clarity and structure. Revenge trader exits, exhausted, frustrated, reactive. He doesn't see the pattern, doesn't see the repetition, doesn't see the predictive algorithm quietly confirming his mistakes. Yet, for those willing to learn, for those willing to adopt structure, awareness, alignment, the path is clear. The lesson is simple. The market doesn't punish emotion. Emotion punishes itself. AI can predict, but humans can adapt, if they are intentional. And so the choice exists. Will you be the logical trader or the revenge trader? Will you respect pattern, respect risk, respect self? Or will you react, spiral, repeat? AI will watch either way. The difference is, one trader survives, grows, thrives. The other loses, repeats, remains predictable. Your behavior is your data. Your data is your edge. And your edge determines survival. If you're ready to trade with awareness instead of reaction, if you're ready to see your patterns, if you're ready to align risk with logic, stay with me. Mind for trade is now your edge.